Hello everyone and welcome to this special talk about a topic that affects each of us in our daily lives, but often goes unnoticed until it's too late: inflation. Today, let's dive into the world of economics and explore why inflation can be considered the silent enemy of the modern economy. Get ready for a talk that will change the way you view this seemingly harmless economic phenomenon. Let's begin by understanding what inflation is. Inflation is the sustained and widespread increase in the prices of goods and services in an economy over an extended period of time. In other words, it is the loss of purchasing power of a currency, which means that over time, your money can buy fewer things than it could before. The Consumer Price Index, CPI. A key element in tracking inflation is the Consumer Price Index, or CPI. This index measures the change in prices of a basket of goods and services representative of average consumer spending. As the CPI increases, it means you need more money to buy the same amount of goods and services you used to buy. Causes of inflation. Now, it is important to understand the causes of inflation. There are several factors that can trigger it. Inflation can be caused by increased demand, resulting in a shortage of goods and services and, therefore, higher prices. It can also be driven by rising production costs, such as higher energy prices or higher wages. In addition, government policies and central bank actions, such as excessive money printing, can lead to inflation. Effects of inflation. Inflation has a number of effects that can be detrimental to an economy. First, it reduces people's purchasing power, which means they have to spend more money to maintain their standard of living. This can lead to a decrease in people's quality of life, especially those on fixed incomes, such as retirees. Effect on savings and investments. Another effect of inflation is its impact on savings and investments. When inflation is high, the real value of your savings decreases over time. Similarly, investments in financial assets, such as bonds, can generate negative returns in real terms when inflation is high. This can discourage savings and investment, which can be detrimental to long-term economic growth. Inflation and wages. The relationship between inflation and wages is complex. In general, when inflation is high, wages also tend to rise, but they often do not rise at the same rate as prices. This means that even though you may nominally earn more money, your real purchasing power may decrease. Policies to control inflation. Because inflation can have negative effects, governments and central banks implement policies to control it. One of the most common tools is interest rates. When the central bank raises interest rates, it tends to slow down spending and investment, which can reduce demand and therefore inflation. Inflation and the economic cycle. Inflation is also related to the business cycle. In the boom phases of an economic cycle, inflation tends to be higher due to strong demand. On the other hand, in recessionary phases, inflation tends to decrease due to lower demand. Hyperinflation. An extreme case of inflation is hyperinflation, which can be catastrophic for an economy. Hyperinflation is characterized by extremely rapid price increases, causing money to lose its value almost instantaneously. Countries such as Zimbabwe and Venezuela have experienced hyperinflation in the past, which has wreaked havoc on their economies and the lives of their citizens. In summary, inflation is a complex economic phenomenon with profound implications for people's daily lives and for a country's economic stability. If not properly controlled, it can erode purchasing power, affect savings and investments and wreak havoc on an economy. Therefore, it is crucial for governments and central banks to be vigilant and take action to keep inflation under control. In this talk, we have shed light on inflation and its many facets. I hope you now have a deeper understanding of why inflation can be considered the silent enemy of the economy. Thank you for joining us on this journey through such a fundamental topic in the world of economics. If you enjoyed this talk, Don't forget to like and subscribe for more economic content. See you next time.